final video I'll make, getting a bit long-winded. This is the Dow. This is the Dow, the US 30. Now this is the market. I mean, you can see there, I've still got it on the chart actually. This is the trade I took. Now the trade I should have been doing, what I should have been looking to do is, well, similar to the first video I made, which was just oil as an example. Well, what you've got here is you've got consistent momentum. You've got this pivot low there, represented by that should maybe get, well, whatever. Right, this pivot low is consistent momentum. Maybe not in the histogram, not too fussed about that, but certainly it's there in RSI and it's there in MACD. All across the board, weekly, daily, it's a raging fucking bull market. Probably going to top out sometime leading out up to Christmas, January, and then we'll see where it is. Where's this? I don't know, 37.5, 38,000, I don't know, something like that. So this is a consistent pivot. So what I should have been doing, this is the trade I should have been taking, is right, where's that? And bam, bam, bam. Well, where we go? I should be going looking at my 55% level, which is coming across there. I should be saying, right, we're going to hit that long. We're going to hit that long there. We're going to risk down to there, just below there, and we're going our way up. Now this is the day. This is on the day. There was a FOMC announcement yesterday, and with the UK and US clocks being out of their usual sync, it kind of fucked up a little bit here. Not in this trade, but on the S&P 500 trade, which is similar to the one I'm going to show you. But looking at the higher time frame, this is what I should have been doing. You can see the rationale for that. It's just consistent momentum. You've got consistency between RSI, MACD, and price. So this pivot low's got to be good. And what else is it? What else is it? It's also a break, close, and retest of you've got that supply and demand zone across there. It's a 4-hour. I colour that or yellow or mustard. So you've also got that thing there as well. So you've got break, close, retest, 1, 2, 3 green candles, and then what are you waiting on? You're just waiting on it or buying the dip basically and risking. So pretty much like every other trade I've showed you, pretty much, and you also have this consistent momentum argument to add weight to it. So I did actually do that, but in the S&P 500, which played out somewhat differently. So that's not a trade that ended up taking, because as you can see, yeah. Well, let's just say that did not get filled. So I chose the wrong US index market for that trade idea. And we'll move that out because that never happened, and none of that. That's neither here nor there. Any of that, and away it goes. Right. So that's a 4-hour. I'll look at more the interlude. I've still got. Probably should have deleted that. But it's there now, it doesn't matter. So, I mean, at this point, this trade doesn't exist in my head. This trade doesn't exist in my head. It does not exist. We'll just run forward to the US Open, which occurred at... Right. So that, I've jumped the gun a little bit. There. You know what, I'll just jump that back and get down onto the time frame I was actually looking at, which would have been... No, that's fine. No, right, just 15 minute. Slow. Right, we'll just stick with this time frame anyway. So that's the 30 minutes. So we're not taking any trade. There's nothing to take there. What have you got? You've also got a supply and demand zone coming through. And that's the obvious one you're looking at this point in time. I'm calling that turquoise because it is it's drawn on a low time frame. It's drawn on the half hour, so that one goes turquoise. So that's the obvious one that you're looking for. But we'll just come into the US Open and see what it says. So bang. So you've got the break there. What time's that? Just coming up to the US Open. Would you be taking a low time frame trade at that time? No, when the US equity markets are about to open for the day. No, you wouldn't. So you're waiting on the US Open, and you'll get a great big green red wipeout dildo when that comes. So I mean, you could say, well, no, that's not very well tested. Now, in the previous video, we had like we had 6 tests of that. That's had one test, one real test of that level. So I wouldn't necessarily be looking for a BCR off of that, a BCRC off of that one. And we are waiting for the US. We're waiting for the market to open as well. So bang, there's the US open. And what it does, warmth like that, and you can, if you're taking a position on a low time frame in amongst that, yeah, what's happening to you. But now that it's done that, I'll just stick that on the Heiken Ashe so you can see the thinking there. That was probably done on maybe a 15-minute chart. We'll stick that on a 15-minute chart if it's not going to. Right, yeah. So that was drawn probably on there. And now with this like tagging that and reversing violently off it, that now confirms for me, that this is a, we'll just get that running forward. Yeah, this is now a solid pivot. So you can see the pivot, I've already got it drawn in there. And where I'm entering just on a retest of that horizontal level. We'll just draw that in. Along there. And that's the trade. I'm giving myself up to 123% extension, and we're just shooting down for there. Now this line's interesting as well, because we'll talk about that when we come to it. So as you can see, it's already drawn in. So just right. So this is now the trade box which frames the trade entry. And we eventually, and that's it. It's that simple. It's that simple. I mean, this is the obvious one. But just with the opening candle tagging that the way that it did, then rejecting and taking my BCR off of this pivotal level here for that reason. And you're buying the retrace. This is totally counter trend on the higher time frames, probably skipping over the finer points, and it eventually goes in my favor. We'll get these Heiken Ashe candles off now, they're not really important. Now I'm looking at this aware that at 7 o'clock we have an FOMC announcement. So I'm looking at this and I actually snatched it there. I think I snatched at it there. So I came out there. So what did I end up getting from there? What did I end up getting from that? It was something like 1.6 to 1. I was kind of like, ugh. I thought I'd done well there. And again, there's the whole thing, like, this extended stop loss. Had it, then that'd be closer to 3 to 1. Had it just went with the logical one, or even just above this supply and demand, a lot better. So again, this I'm not sure about. It's something I'm doing for the time being because it just makes me feel more comfortable entering a trade, quite frankly. Anyway, back to the original trade box. And so remember, at 7 o'clock, we've got our FOMC meeting, and at any rate, looking again at this, you're coming already back down. You're coming down in like a clear level where you're going to get support or downside resistance. So I snatched at the trade, took profits there, and if I'd had only waited, my entry would have got missed by a fucking ball here because the FOMC announcement was not at 7 o'clock, it was actually at 6 o'clock. And had I not taken profits there, that is what would have happened to me. Now, we'll jump over to the S&P 500 where I performed a very similar trade with exact same principles. We'll see how that went. Right, so similar, very similar setup. So same idea as the US, as the Dow. This is the same thing on the S&P 500, and you can see there it's already drawn in from yesterday. If you crawl from the start of the video, if you look at the higher time frame chart, it's slowing down this. I was actually looking to buy the dip down here, And as I pointed out, had I taken this exact same idea and framed it on the Dow, the US 30, I would have been on a fucking huge winner. Um, in light of the face rip on the back of the FOMC announcement. So this is the exact same trade, similar. So there you go. There's the US Open. You can see there. I'm calling this a viable. Look, there's your pivotal level there. There's your S&D zone, and there's your strong. There's your BCRC off that level, and right, yes, I think I'm getting interested about here. So I'm just basically I'm just taking that as a 61.8% trade. Why I'm not going up there, I don't know. This is how I done it with this one, just because it seems to line up with that level really quite nicely. Extended stop loss here, same as yours. So I'm in the trade at this point. I don't get the razor spread, so it was, a bit of a it was actually when price came up to this level, I got into that trade, and this fucker just kept going against me, and it's going my way. And you can see there that having the extended stop loss actually did keep me. If I had that tight behind there with the brokerage spreads, I would probably got stopped out there. So it kept me in that one. I'm pretty sure this is going to work. And up it comes again. And this is getting to like my dinner time, and I think at this point I've got till 7 o'clock until this FOMC announcement, by which point I'm leaving the trade. But obviously, as I've already pointed out, that FOMC announcement came at 6 o'clock, and bang, and yeah, that's how that one went. So exact same or very, very similar idea, very, very similar principle across all time frames, and it just didn't fucking work, and that's just how it goes. And you know, and although my extended stop loss saved me from exactly this, I mean, do I really need it away up there? I don't know. Probably that'd suffice, but that was a loser. So I don't know. I've probably covered sort of like most of how I approach the market in that collection of videos.